Hey guys, welcome back to the channel. So glad to be here today. I hope you guys are enjoying your week. And today I'm bringing you a value investors ETF that can serve as a core holding. Now, when I say core holding, I always think you should have a good mix of stocks as a base. And then you can do other things around that, sort of like a satellite investing strategy per se. So if you missed my last video, I went over a closed-end fund that offers a little bit more income. And this one is going to be a little bit less income, but more stable value investor type companies. So if you're new here, please consider giving me a subscribe, like, share, all that good stuff. I'd really appreciate it. I go over a bunch of different income strategies. I try to find great ETFs for value investors and dividend investors. And I track some different income strategies with on my own using covered call strategies. I share my own dividend portfolio once a month, and that's coming up here pretty soon. So yeah, if you'd like to join, please hit the subscribe, like, share. Let me know in the comments down below that you're new. Let me slow down because I'm getting ahead of myself. And I'd really like to have you here. We're building a great community of people, and appreciate all you new subscribers. Also, if you appreciate what I'm doing here, it would mean a lot to me. Down in a pinned comment down below and also in the description, if you could use my Amazon link. Some of you have. I really appreciate that. And what that is it doesn't cost you any more money than what you would normally buy on Amazon. So if you click and use my link, it gives me a share of a small commission of whatever you purchase. You don't have to buy what's linked there. You can buy whatever you want, but as long as you go through the link that's provided below, I will get a small commission on qualified purchases. So if that's something that interests you, if you're an Amazon shopper and you're not using someone else's link, if you use mine, I would definitely appreciate it. Okay, so what ETF are we talking about today? We are talking about ticker symbol SCHV, and that's the Schwab US Large Cap Value ETF. And the index that they seek to track is the Dow Jones US Large Cap Value Total Stock Market Index. They make some long names for some of these things. And I'm just going to do a quick overview of what criteria they use to be able to be included in this index. And for that, I went to the Dow Jones Indices website and I looked for this ETF. And I found the style evaluation criteria. So they, to be included in this ETF, they look for 6 different measures. Okay, 2 are projected, so they look at they're forward looking, which is nice. It's a nice touch. 2 current, so what are their current situations, and 2 historical situations. So number 1, they look at projected price to earnings ratio. So they look at forward earnings ratios or estimates. It's based on the stock's closing price at the time of the annual review and its mean annual expected earnings per share for the next fiscal period. It also looks at its projected earnings growth. So based on expected 3 to 5 year annual increase in operating EPS. So they want to look and see an increase in earnings growth. So that's the 2 projected ones. And then they look at price to book ratio based on the stock's closing price at the time of the annual review and its latest annual book value per share. And then number 4 is the dividend yield based on the stock's closing price at the time of the annual review and on total dividends the company has indicated it will pay over the next 12 months. So that's the 2 current. So the 2 historical, they look at trailing revenue growth based on annualized revenue growth for the previous 5 years, and then trailing earnings growth based on annualized earnings per share growth for the previous 21 quarters. And now they give each of those criteria a score and they weight them, and then that's how whoever scores the highest gets the top holding, etc., etc. So let's look at what SCHV is composed of. It has 413 stocks in the ETF. 20% of that fund is in the top 10, 80% in the other 403. 97.43% of the fund is from North American companies, a little under 2% in Europe, a very small little bit in Latin America and Asia. Let's see, the market cap, we have 82.5% in large cap, 13.5% in mid cap, 3% in small cap, and under 1% in other or micro. I don't know what other is. I gotta figure that one out. Morningstar classifies this ETF as a large cap value fund. And if we look at their top 10, Johnson & Johnson takes top spot at a little over 3%, Procter & Gamble at 2.5%, JP Morgan around 2.5%, Verizon just under 2%, Intel just under 2 or 1 3/4, AT&T right about the same, Pfizer right about the same, Comcast a little over 1.5%, Cisco Systems a little over 1.5%, and Merck at a little over 1.5% as well. Now, what I like about this fund is, to me, the person that wants this fund probably thinks that tech is overvalued. So if you think the tech sector is a little bit hot or a little bit it's run too far, this has a smaller portion of its assets dedicated to tech. So if we look here, its top sector is healthcare at 16.5%, financials at 16%, consumer staples at 13%, and information technology at 12%. So I believe the S&P 500 has almost 25%. Correct me if I'm wrong, but I believe it's over 25% of the S&P 500 is in technology. So this is about half of that. So if you think tech can roll over and get over into the value side, this could be a fund to hold for a few years. You got industrials at almost 11.5%, communications at 6%, utilities at 6%, consumer discretionary at 5.5%, energy at 5.5%, materials at 3.5%, and real estate at 3.25%. Oh, I did bring it up. Let me look. Vanguard has the VOO S&P 500 at almost 24%. So yes, SCHV has about half the exposure to technology than the S&P 500. So again, if you are one of the ones that think technology is a little overvalued here and could be in a coming correction, SCHV as an ETF may be what you're looking for. Let's look at its expense ratio. 0.04%. That's cheap. That is pretty darn cheap. I think VOO is 0.03 possibly. It does pay its dividend quarterly, and it does have a yield current of 3.47%. So almost, not quite double the S&P 500. So if we go and look at dividend history here, we'll look at the dividend growth, and the dividend growth is pretty nice if my computer will cooperate. Come on, you can do it. There we go. You look at this 1-year growth rate, 13.4%, 3-year growth rate, 12.5%, 5-year growth rate, 11.5%, and it should have a 10-year, but it doesn't, and I think it got a little punished because it had a little bit of a down year between 2011 and 2012. But excellent growth out of this fund. And finally, we'll look at what $10,000 did for the past 10 years. And I'm going to put on here July 26 with the end, July 26 of 2010 with the end date of July 26, 2020. We'll click chart 10,000 invested, and we'll see SCHV for the past 10 years. If you invested $10,000, gave you an average annual total return of 10.23%, total return of 164.96%. That's with dividends reinvested. So your $10,000 10 years later would be $26,491.95. Now, if you just took those dividends and didn't reinvest them, you still got a respectable 9.5% annual return, a total return of 147.82%, with the ending investment of $24,788.44. Now, one thing that I just realized that I didn't share with you was the turnover ratio in here. So let's go back to Fidelity and we'll look at the key stats. And right there, you'll see it has 4 managers managing the fund, and it has an annual turnover ratio of 7%. That's not too bad. You can probably hold this in a taxable account without having any issues. I would say. So, managed by Charles Schwab, large cap value. I'm a big time value investor. I love being in the value stocks. Is this one for you? Let me know down in the comments what you think. Is this some fund you would consider? And if not, is there any other ones that I should be looking at? So if you enjoyed this, please give me a like, share, subscribe, comment down below. Use that Amazon link if you so please. I would appreciate it. And you guys have the great rest of your week, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.